So far, the month of May have been pretty kind to the S&P 500. As you can see, that the for the month of May, it's just been positive, and it's one bullish candle moving up. And on this weekly chart of the S&P 500, we see that it broke above this 30-week moving average here. It gapped up from the indecision spinning top candle from the previous week. And on the daily chart, you can see that the S&P 500 was up every single trading session last week. And here I have this 8.3%. This indicates the extension from this 30-day moving average. You can see that the 30-day moving average turned up, and also the price that moved above the 30-week moving average. And I will talk about this 8.3% or this extension here a little bit more later on. And here we see the Dow Jones Industrial come up to this 30-week moving average. Now also the 30-week moving average is still kind of showing a little bit of a decline here. Likewise for the 30-day moving average, although the price is above these two moving averages. And also looking at the percentage away from its all-time high, we're basically somewhere around 5.35%, a little bit under 5.5% from its all-time high. And for the broad market index, the New York Stock Exchange Composite, you can see that it is only less than 2% from its all-time high. And you can also see the price is above its 30-day and also 30-week moving average. And for the Nasdaq 100, the Nasdaq 100 has also got above the 30-week moving average. And also notice that the 30-week moving average is starting to rising a little bit now. And we also see the 30-day moving average has also been rising. As of Friday, it is a little bit over 3.5% from its all-time high. And look at the Russell 2000. The Russell 2000, although it is up above the 30-day moving average, but it is still below the 30-week moving average. And also the distance away from its all-time high is over 14%, 14.25%. So we're quite a way for the small cap index to get back near its all-time high. And for the Dow Jones Transportation, the Dow Jones Transportation had a good week last week. It is up, but it is still beneath the 30-week moving average, although it is above the 30-day moving average. And once again, it is similar to the Russell 2000, still quite away from its all-time high. It's almost 15% from its all-time high here. Now let's come back and take a look at this overextension on the S&P 500 from its 30-day moving average here. See, we are basically 8.3% above the 30-day moving average. And what I want to highlight is basically what happened when we see such an extension away from the 30-day moving average. And we want to go back a few years, and we see the couple times that it showed that type of extension. And a couple times back in 2020, back in June, we saw a 8.5% extension away from the 30-day moving average, and a 6.2% from this 30-day moving average back in September of the same year, 2020. Then also on 2022, we saw a 7.2% extension from the 30-day moving average. So what I want to see is once that happened, how much of a pullback could we expect it to occur? So let's go back and take a look at the June 2020 here. So you see this is 8.5%. If we go from the high to the low before we get a bounce back up, so basically looking for a pullback. And back in June of 2020, that's about 8.27%. So that's quite a bit here. And for the September timeframe, say we got this low before we get a bounce back up, and that is 7.21%. So that is quite a lot in terms of percentage of pullback. Now let's go back and take a look at the September 2022. Let's go here, and we take a measure on the 7.2% and come down to this pivot low here before we see a little bit of a bounce back. And this time it's not as much as the 2020 pullback. This is only 4.75%. So going back to the present here, and here is the 8.3%. Let's say we go down to this gap here, and basically this is about a little bit less than 5% pullback to fill this gap. So that would be one expectation. Now we see a 7 or 8% pullback, then we're basically talking about pulling back to the 30-day moving average, or back here on this pivot high here. This is more like a double bottom pattern here. This is 8.7%. So that might be a little bit more drastic, but it would not surprise me to see this pullback and come down and fill this gap, or even just come down to this 5,800 area, and that would be 3%. So that's a little bit of a shadow pullback, and maybe we won't see a pullback until we get a little bit push up higher. But again, I would not be surprised in the coming day that we'll see a pullback, and especially with the Friday after our announcement where Moody downgraded US, and right now we're seeing a quite a after hour sell off on that. So we'll see was that hold or not, and maybe that will trigger a little bit of a pullback, come down and fill this gap. Now, also the other thing is the market been telling us to expect a new all-time high, and we're going to take a look at that message, how the market is telling us to monitor for the possibility of a new all-time high. So we're going to take a look at that later on in the video. So stay tuned. Now, before we go and take a look at that market message, let's quickly review what the indexes has done in the week that just passed. We are looking at the performance here. On the last week, the Dow Jones Transportation was the top performer, followed by the NASDAQ, and they both are up over 7%. All the major market indexes had a good week. Going month to date, we see that Dow Jones Transportation is a top performer, followed by the NASDAQ. And for year to date is the New York Stock Exchange Composite gain over 4%, while the NASDAQ 100 a little bit under 2%, and the SP500 1.3%. And looking at the 11th sector in the SP 500, was noticed last week, all the sector are positive for the week. With the technology, the consumer discretionary was the top performer. The month to date, the technology and discretionary is still the top two performer. And year to date, we are looking at the industrial is actually the top performer for year to date, with a 9.12%, followed by utility and then financial and communication. The worst performer is the healthcare. And looking at some of the other key sector here for last week, we saw the semiconductor was the top performer with a gain of a little bit over 10%. For the month to date, the semiconductor also leading the pack with over almost 17% gain. And for year to date, we got the minor, of course, gold been running up, but seems to recently have a little bit of a pullback. So I wouldn't be surprised that some of these gains will be diminished in the coming week if gold continue to pull back. And the semiconductor is year to date only gained 1.75%. Now let's take a look at the sentiment and see what the market participant feeling about this market here. As you can see that we are looking at the VIX below this 20 level here. On Friday, it closed at 17.24. So definitely the market participant are feeling less fearful. Matter of fact, they're feeling a little bit complacent right now. And looking at the put call ratio, it showed them quite bullish because it is down at 0.57. Remember when we say when it is up above 0.75, then we see the market participant getting a little bit nervous and start putting putting on hedges to hedge their position. And when you get above 1, then they're going to get quite bearish and start buying put, betting on the downside. Right now, it is below 0.75 and it is down at 0.57. So they are quite bullish and they are buying call to bet on the upside. And here looking at the internal for the daily up-down volume ratio, we're seeing a positive up-down volume ratio throughout the week, except on Wednesday that we saw a little bit of a negative divergence. between the S&P 500 and the up-down volume ratio, and also on the advanced decline. But other than that, the remaining four trading sessions last week, they are all positive. And also in the New York Stock Exchange, new high, new low, we are still seeing more stock making new 52-week high than 52-week low. So that is a positive, but we'd like to see the number of stock making new 52-week high to expand a little bit higher. Now, here's the interesting chart of the cumulative AD line in the New York Stock Exchange and the closing basis S&P 500. Okay, this is how the market is telling us to expect a new all-time high from the S&P 500. Now, when it's going to get there, we don't know, and how it's going to get there, we don't know. The market never tells us the when and the how, but it does tell us the expectation, what it might be planning to do. Because as you can see, the advanced decline, cumulative advanced decline line closed above the the high of this peak here, in addition to the recent peak. Remember the recent peak we're talking about is already telling us that it closed above here, which is the all-time high close on the S&P 500 back in February. So we be expecting this to come up and take out this high to resolve this positive divergence, because we are looking at this particular positive divergence here. So we see this, and on the S&P 500, so this is the positive divergence between the cumulative AD line and the S&P 500 on a closing basis. So we're going to be monitoring the S&P 500 for potential new all-time high close. Now here we're looking at the NASDAQ up-down volume ratio and also the daily advanced decline. Similarly to the New York Stock Exchange, we did see a little bit of a negative divergence on the advanced decline on Wednesday. Now on Thursday, we actually saw a little bit of a negative divergence on the up-down volume ratio, while the NASDAQ 100 was pushing a little bit higher. Although, on Thursday, it wasn't as strong as the S&P 500, because it's closed just marginally above the previous day close. So we were looking at a little bit of a negative divergence on the up-down volume ratio, but the advanced decline was positive. So that kind of negates some of the divergence here on the up-down volume ratio. And here in the NASDAQ 52-week high versus 52-week low, it also shows a positive, so indicating there are more stock making new 52-week high than 52-week low. In addition to that, the number of stock making new 52-week high actually came up, and right now it's above 100. And on Friday, there were 126 stock make new 52-week high, which is a positive. Now here in the NASDAQ cumulative AD line, we are not seeing the positive divergence that we are looking at from the S&P 500 and the New York Stock Exchange. The New York Stock Exchange cumulative AD line. Here we see that it is still showing no divergence based on this type of, on a closing basis from this high to this high here. If the AD line come up and take out this high, then we'd be talking about a potential different picture here. But again, the negative divergence in the NASDAQ market have been persisted for quite a while, and the resolution won't occur until we see a major top from the market. So wouldn't be putting too much credence on this right now on the cumulative AD line divergence between the NASDAQ 100 and the composite NASDAQ composite cumulative AD line, because of the skew on the Max 7 stock is really skewing or distorting the technical picture here with this indicator. So on the sentiment basis, the market participants are getting a little bit more bullish now. So I got to be careful about that. Once we get a little bit euphoric, then we have to be a little bit cautious. Okay, and also in addition to that, even though the market is telling us that we should expect to see the S&P 500 to come up to the new all-time high area, it doesn't tell us how we're going to do it and when we're going to do it. We could see a slight pullback before we push up, or we could just continue to run. Who knows, right? So we just have to plan on it and prepare for it Now, I would not be surprised not to see the Nasdaq 100 come up to make a new all-time high when the S&P 500 come up to a new all-time high. So we just have to wait and see to see how that play out. So now let's go and take a look at the price action of the S&P 500, the ES, NQ, the SPY, and the QQQ. Now let's take a look at the price action of the S&P 500. We saw earlier about this overextended, from the, the price from the 30-day moving average and what the possible implication could be. So let's take a look at some of the technical that have changed recently, right? First is the moving average here, on this 30-day moving average start to come up, and also the price is above the 30-day moving average. In addition, we also noticed that the 30-week moving average seems to be flattened out. So we don't know, is it going to turn up or is it continue to flatten out and then start turn down? But at least right now, the price is above the 30-week moving average. So that's another change, because remember back here, it went down and dipped down and it was stay below, this sort of declining 30-week moving average for quite a while before starting to pop back up. So those are a couple of the technical that have changed recently. In addition to that, let's go and take a look at what it did last week. We saw that the price actually went up to the monthly upper range and closed above that on Friday. So, that quite strong. It took out the month range, the upper range, just in 2 weeks into the month. And in addition to that, here is the weekly range that we were expecting last week. And you can see on Monday, it's already took out the upper range. And it never looked back since then. It just continued to march up. So now we're going to take a look at what is the market projecting for the coming week. So here's what the market is pricing in. It's not pricing in a new all-time high for next week, and that's for sure. It is only pricing the upper range somewhere around 6,048 area, and the lower range between 58.68 and 58.15. And let's put back some of price zone that we we basically are watching here. So you can see that on a possible pullback from this extended move here away from the 30-day moving average, we see it could come back into this zone here, the 5,800 level, and that's basically dipped down below the weekly lower range. And then maybe we get a little chop here, or possibly push down here and fill this gap and get down into the the zone between 56 and 5,700. So it's right in the middle here, about 5650 area, and we could see a little bit of a support, potential support here, and see would it get a bounce back up. Now, looking at the ES, the E meaning S&P 500, we also notice that the ES is above the 30-week moving average and also closed way above the 30-day moving average here. So once again, we could look for a little bit of a pullback, and here's what the market is pricing in for the coming week. It is pricing in somewhere up at 6,052 area, 6,052.50 and 6,040. That's the upper range. And the low range is between 58.57 and 58.15. So again, if we see a little bit of a pullback, we could see it come down to the low range here. And the interesting thing is also the market is not pricing in a new all-time high for the coming week. So if we put back some of the price zone that we've been watching here, and we could see that these levels here on the lower range, it is well within one of our price zone here, somewhere around 58.50 area. And also we got another price zone here down at the 5,800. So we are getting a little bit of a pullback to try to fill this gap. We could easily see it come back down to test this 5,800 and possibly get into this high volume area, which is 5,700 area here. So those are the possibilities on the downside that we need to keep an eye on. But for the upside, it seems like it will be limited to somewhere above the 6,050 area. So we'll see. Maybe it will give us a little bit of a shocker and push up into the new high next week. but that could be a little bit remote because we already taken out the the May monthly upper range here. So the 60-50 will probably be a little bit of a key area to keep an eye on to see would it be able to push above that and get up here to the 6150 area here, this high volume low or the high volume area. And here looking at the SPY, we see the SPY also close up above the May upper range and it took out the weekly range. So here's what the market is pricing in for the coming week. For the coming week, it is pricing up here at the 6,004 here. Let me remove these here. So it's pricing in at 604.70 and 602.80 for the upper range, and the lower range 583.70 and 579.50. So it's not even pricing in to come down and fill this gap here. But here are some of the zones that we've been watching, and one of the zone areas somewhere down here at this 580 area, and the gap fill will bring it back down to this low volume zone here, somewhere around this 567 and 564 area. So we'll be watching for the possibility to come down and dip below the 580 and possibly come in and fill this gap. If it continue to push up, we'll be looking at the 604. I'll be surprised to see again, for a new all-time high to be put in next week. But hey, anything is possible. And looking at the NQ, the E mini NASDAQ 100 future, we also see that the price closed above the May upper range and also way above the weekly expected range here. So right now, we're basically also looking at this extension here. And let's see what that percentage is. Just do a quick measure here, approximation. And that is a 9.5%, 9.6% extended from the 30-day moving average, though that is quite a bit. So I would not be surprised to see a little bit of a pullback in the coming week. And here's what the market is pricing in for the coming week. For the upper range, 21,950 and 21,828.75. The lower range is between 20,971.75 and 20,825. So we could see a little bit of a pullback, come back down to this 20,800 area. But I wouldn't be surprised to see it come all the way down to this 20,370 area to fill this gap. On a push up, let's basically come up to this upper range. I'd be very surprised to see it come up and take out this 22,500 area, this pivot high, or even a new all-time high. And here's what the QQQ did last week. It also moved up above the monthly upper range and took out way outside the weekly range. And here's what the market is pricing in for the coming week. The upper range between 534.10 and 532. The lower range is 508.90 and 505. And looking at some of these zones here, we also see there's a zone right at this 510 area. So that is in confluence with the lower range of the weekly expected move. So I wouldn't be surprised to see it come down to attack this lower range and possibly come down to this low volume zone here between 494 and 493 area, this gap fill area. So to come down and test this area before it might potentially find some support and bounces back up. Now, if it come up, then we're basically looking for these upper range. I'd be very surprised to see this high be taken out next week. But once again, anything is possible. So as you can see, the SP 500, the market, it is a little bit overextended and been pretty much one time framing up for the last 1, 2, 3, 4, 5, 6, 7, 8 session. Pretty much a consecutive session, one time framing up on the S&P 500. So it would not surprise for us to see a little bit of a pullback in the coming week before it makes its next leg up, and for that possible, tagging or attempt to make a new all-time high, such as the message from the market telling us to expect that based on the cumulative AD line. So if you like this video, be sure to smash the thumbs up to give it a like and help promote this video. And in addition to that, if you are new to this channel, click on the subscribe to this channel And if you'd like to see additional content from me, be sure to go check out my newsletter, The Pulse of the Market, at substack.com. I have the link in the description below, and the link is smtraderCA.substack.com. Thank you for watching, and good luck on your trading.